Hi everyone, I'm Satyen Kothari. I'm one of those insane guys who's been an entrepreneur for about 2 decades plus now. Obviously, I don't get the message that it leads to insanity. This is company number 5 for me. It's Cube. Cube is disrupting, as Manu said, disrupting the wealth and asset management world. Our simple thesis is that how can we create equality in creating wealth for all classes of people across the world? So let's talk with from that mighty objective, what is the reality of what we are trying to do and what's the problem we are trying to solve? Um, there are two huge problems in wealth management, mis-selling and mis-buying. I think all of us are familiar with mis-selling, but mis-buying is the other part of the equation. So everything is misaligned towards the best interest that you might have as an investor, from people who are selling you products knowing a lot more about the product than you, including the downsides and risks, knowing a lot more about the commissions they stand to earn from these products, and not always revealing those they have misaligned interests from you. And a plethora of other options where they need to keep creating and pushing products at you to make you think you have more and more choices. Some of the products get more complicated with time. Misbuying, which is us as investors, we are as guilty because we almost run away from the task of managing our own money and our own wealth. We have fear. We have a fear of maths. We have a fear of working on it because the ratios and the graphs overwhelm us. A lot of us who aren't good at maths just say, this is not what I want to deal with in life, right? Then there's psychological issues we have which create misbuying. So the current pandemic, for example, a lot of people are talking about exiting their portfolios or stopping their SIPs. When the market's booming, that's when everybody wants to pour money in. It's exactly the opposite of what you do rationally in other areas of life, where if something is overpriced, you don't buy it. But when the same thing is on sale and you want it, you're likely to buy it. So two problems, mis-selling, mis-buying, we'll come back to this. In asset management, it's a little bit more complicated. And excuse me, I'm going to get a little technical on this area later on. But the key problems are, again, twofold. Lack of fair access. So when you look at cross-border asset management, let's say all of us have gone to Stanford, we understand how the US works partially at least. A lot of the high quality products that are available in the market are only limited to accredited investors, private equity funds, hedge funds, etc. And this is a hot topic of discussion amongst many, many people, including business school deans, etc., about how unequal this is. Why isn't the average retail investor allowed to access the same high quality investment option that the super rich have access to? Right? Maybe the argument always is that it's because they don't understand the risk. But at the same time, you're allowed to buy shares on the market, and those have as much risk as well. And then the second problem that fund managers have in the traditional asset management world is there's no modularity. A typical asset management company is a monolithic entity. The research is done internally. There's a regulatory and compliance team. Publishing of the information of how the fund is doing is done by that same entity. And typically the marketing work is also limited to that entity. What's the problem here? The problem is you can't have best in class entities doing each one of these, which creates true modular scalability. So we looked at these two problem statements, not that simply and not at the same time. I said, what if we built a company around 3 novel guiding principles? And I use the word novel in air quotes because these really should not be novel, right? Especially to all of us coming from the world of tech. This is standard, but sadly in the world of wealth and asset management, these are new concepts. 1, ethics. Start with ethics. Try and do the right thing. Shocking, most people don't do that. Think about the user first. What do they want? What's the level of information they want? What's the right product for them? And show them that product. And third, use technology. Use technology to simplify the user journey, reuse components that are a burden on the user like KYC, etc., to make the business highly scalable. So on the flip side, you can take away the burden of high commissions because everything needs to be done manually. How did I enter this little world? I come from a very simple background. I come from a middle-class family in Bombay. We grew up in from a 400 square foot house for 4 of us. And I had a journey which was fortunate at most places. And in 2016, I sold my company, last company, Citrus Payments. And that's when I got exposed to this world. And that's when it hit me on the head saying, why was this not available? All these great advisors and wealth managers when I actually didn't have money. And that's what led to this movement. So we have two product lines, Cube Wealth, and we very cheekily say, for those that deserve to be rich, but we mean it, right? What do you mean by deserve to be rich? Because there are people who think they are smarter than the markets and they want to trade on their own, they want to invest on their own. Great. If you think you can beat all the quant funds, hedge funds, experts with a team of 20 researchers out there with insider information in a country like India, great, go for it, right? You probably are enjoying investing more as a game than thinking about wealth creation. So what we have is the first honest mass market wealth manager. Kind of take an IIFL, take a Avendus, etc., Kotak Wealth, and we brought it to the mass affluent. Our ticket size starts as little as 10,000 rupees. It provides the same bouquet of services that a wealth manager would using humans. We help you build a perfect portfolio. We educate you because people don't know how to start investing. You should not start investing by going in the stock market or mutual funds. You actually have to set up an emergency fund first. Guess why nobody tells you that? Because there are no margins when you put money in an overnight or liquid fund. We start with saying, do you have 6 months of money parked away? We make nothing. In fact, we lose money on the payment gateway. Access to quality. We find the best quality fund managers out there based on data and philosophy who are typically only accessible to the ultra rich. And we bring them to the masses. How? We take away the burden of any user-centric servicing cost from them so they can afford to bring it there. Huge, unique aspect, me and my team put our personal money in every asset we have on Cube Wealth. I don't think you'll find a wealth manager who can ever say that. Shocking data. Last week, we crunched 30 portfolios that users had submitted to us, only mutual funds, 36 crores worth. Our data from our advisor, mutual fund advisor, showed 17 crores of the mutual funds were recommended as sell funds, 47%. Nobody knows this, they're floating around. So this is the world around wealth management. Asset management, it's a cross-border cloud platform, which is meant for fund managers. What we've done as an out-of-the-box service is broken all those modules and said, how can you get the best-in-class marketing entities in the US? How do we build SaaS dashboards so you can track your money and information? How do we give you a FPI license without you needing to apply for it? And how do we execute your trades? So if you're an amazing fund manager sitting out of Pune who has a track record that cannot be beaten by anybody in the world, today you're limited because you can't have your fund launch across the world because you don't have all the resources to do this. We equalize that world. And similarly for the investor, we say, whatever your ticket size, you might be sitting in the US, just because you don't have Goldman working with you, doesn't mean you can't access that same Pune fund manager. This is a SaaS service, 0 rupees to start, live across 50 countries in 1 week. So all of it because we think tech first, users first. And the last thing, and I always say this is about the team because really I'm kind of the face of the company. We are building it for the next 20 years. All aligned for the long play. We have a weird stock option plan which says stay till we get liquidity, otherwise you don't get anything because we want everybody to align. It's a super generous plan where everybody has a significant ownership. We are underfunded. We like it. There's less pressure from VCs. No offense, Sandeep. But at the right time, we understand the point of money. So we know that we'll have to raise to expand. And we have 3 guiding principles, which we apply to our users and to ourselves: integrity, intelligence, intensity, which is always applied inside the team. So that's us, Cube Wealth and Cube Cloud.
Incredible. And that was like right on time. That's so impressive. So questions for Satyen on the chat, please. If you can type out your questions, that would be amazing.
So Satyen, with what's happening today, what would you recommend to this group?
As I said, Sandeep, right? It's when there's a sale on, you need to be smart, and you want to be a little greedy, but obviously you have to be smart about your money. So one, we don't recommend stocks or mutual funds. Our advisors do, right? But if you have a long-term conviction that the Indian economy is going to do great over the next 10 to 20 years, this is a great time to go in few tranches. Maybe not all at once, but maybe 3 or 4 tranches over the next few months. Just today, I checked my portfolio. There's still some pretty good discounts. And what I do is I just trust the fund managers, some of that, the ones that you know, Sandeep, like Marcellus, etc. And we're like, these are the smart guys. Let them make the decision if I have money sitting there. The second thing I've done is I've kicked out the lemons in my fund management portfolio right now. I said, everybody was doing well, but let me get out of the ones I did not enjoy working with in terms of performance, exit those, take the tax loss to harvest that, and redeploy it immediately with the guys I want to be with for the next 5 to 10 years.
Makes sense. Thanks.
Satyen, you can see the chat, the questions on the chat. If you want, I can read them out to you, or if you can see it, that would be amazing too.
Okay, sure. Let me just leave the, okay. So how do we make money? Right now for India, we make commissions like everybody else. We would love to move to a performance fee model from the user, whereas we make you money, we make money. We are psychologically a little way away from that, where people will want to pay explicitly, but we are already introducing a new service called Cube Prime, which gives you a cash back on the commissions we make, but you have to pay a fee for it. And over time, we'll align it to a performance fee.
No.
What are the typical pushbacks?
I'll be done at 8 o'clock.
The typical
You need anything from me?
The typical pushbacks we
You
get
guys
are,
do it today.
it's a digital platform. We haven't heard about you. How do we trust you? And it's a long game. Reputation can only be won with time. We are now about almost 2 years in. Our users who have had portfolios for more than a year absolutely love us. Our fund managers are beating the market by about 20% right now. I can't take credit other than selecting them. They are the intelligent guys. So over time, because that builds trust, they start referring people, they add lump sums. Who do we compare ourselves to? I think in the online world, it's people like InWealth, who are a very hands-on data-driven platform. We stay very away from that. We say, if you want to simplify your life, put it on autopilot, come to us. If you like big dashboards and spreadsheets and like to actively manage your money, you go to InWealth. But really the big competition in India is the user psychology of keeping money in FDs or saving it for property, or then finally succumbing to the bank RM calling you and saying, sir, mutual fund hai, le lo. You have a big bank balance. So we need to change that. Tech advantage, I mean, obviously from scalability to simplicity, but the big tech advantage is also in ethics, right? My team cannot hide behind showing certain products which make us more commissions than others, like what a human wealth manager could do, because any of our users can open up the app and see apples to apples comparisons across all of our products. So we are forced by tech to be extremely honest as well, which is an important part of the principle here. Yes, a retail investor can get access to US stock markets through us directly. Very happy to announce we are signing up a Stanford alum who works out of Palo Alto who's an award-winning RIA in the US to be a fund manager and advisor. Again, in the pure spirit of how we eat our own dog food, this is a person who's been managing my portfolio as well for the US for a while. And that's the confidence we bring. And this is a service that's just gone live. So you can do DIY investing in the US through the same app. So your whole portfolio is India plus US, and you can sign up for the advisory as well. What's the most critical part of your offering? I think the big thing is, as I said, winning trust from our users, right? It's going to take time. There's no easy way. We make mistakes, we own up to them, and we say, hey, that asset did not meet our standards. For a young company, we've actually deprecated assets and removed them, even though that meant we lost AUM and users who only had that asset. But again, work as if it's your money, because literally it's our money at times sitting there. What's our target user?
Let that be the last question, please, Satyen.
Okay. Our target user is a busy professional, middle class, middle management to senior management, somebody who has a net worth which is in the tens of lakhs to a couple of crores, who will not be approached by a wealth manager, but who's outgrown their bank And these are the guys we need to go after from everything we've learned to date from our last 2 years, plus my previous companies. I'm cheating and combining Paula's question inside Manu to say that, hey, you can build a better mousetrap, but that will be short-lived. But instead, if you do a long play game, you could be in business for the next 20, 30 years like an Amazon or HDFC. Thank you.